everyone! Welcome back to the RationalInvestor.com's Broiler Chicken Show. Our funny little named 2-hour rant from the Beamish on the weekends that I like to do for the public. Interesting.
Hello, everyone!
Whoa, hello!
Welcome
Bang.
back to
the YouTube is officially live. Alright, well, that's good to see. Got a grand whopping 4 people watching the video right now. And I suppose I count as one. So maybe 3 people. So I was joking before getting this started. I seem to have lost a bit of interest by you guys. So anyway, it's here nor there. Good part about what I do is I literally have not changed anything I've done. Bing bong, Avon's calling. In the market now for, oh goodness. I would say on balance, I mean, you add things over the time and you articulate and you get a little sharper and stuff. But basically, this is the same thing I've done in generally in principle since the dot-com boom days. I mean, easily. My son, of course, was born around the end of all that, so I was slightly distracted with him in his early years, and then sadly about 10 years ago I had horrible life tragedy. Trying to slowly get over it, but on balance, when it comes to investing and spending money in the marketplace, not a heck of a lot's changed. Obviously life throws you curveballs, and if anything, this is half of the reason why we want to sort of, just follow the process. The process doesn't change. It's exactly the same when Richard Wyckoff would do his interviews with people like W.D. Gann and Gartley and all those people. I think he interviewed Gartley. Can't remember. Also, too, ironically enough, who's our buddy? Always, for some reason, Livermore, Jesse Livermore. His name always slips my mind. Anyway, ironically enough, as he went through his life, he traded and, of course, made obscene amounts of money through sort of what I would consider this generation's equivalent, which was the sort of post-U.S. Civil War baby boom period. I think it's very similar to the 20th century's baby boom generation post World War II, and how its whole life cycle played out. Very, very similar. So, which means that if we look in historical equivalents, we're in a very tumultuous time. Like, I think historical equivalents, we're kind of like in the 1940s right now. Did anything of any significance happen in the 1940s around this globe? Leave that to your imagination. I'd be curious to see how this sickness does play into the whole thing. I mean, we might actually be setting the stage for a very, very similar 1920 scenario, where the central bankers have basically completely lost control of the monetary system, and as a result you see absolutely insane, wild gyrations in asset prices. On the inflationary part of the cycle, fortunes will be made. Then sadly, on the deflationary part of that same cycle, when people sort of get their heads on straight and start acting like adults again, you could very easily have like a Great Depression. They called it the Dirty 30s, where really all the central bank did was start normalizing monetary policy following the Spanish flu insanity. So, that's the backdrop that we're playing this whole game in right now. Ay caramba. Holy hard time to play the game. I mean, the good part about it, of course, is if you can catch the upswing and you can actually pay yourself and lock in some profits along the way, mercy me, there's some serious wealth is being generated here. Well, there's one guy, I swear. And it's interesting how these bull markets can create these celebrities and create these characters that are literally going to be bigger than life. I would make the argument that the top of the dot-com boom was all around the AOL Time Warner merger. What the hell was AOL's guy's name? God, I can't even remember so long ago, but I can still see the image of old man CEO Time Warner dude. And he was like a gnarly older dude, typical chairman of like massive multinational conglomerate, kind of, not even in touch with reality. Bringing on this AOL, America Online, you've got mail, right? And all that nonsense. And of course, they way overpaid. And it was actually the death knell of Time Warner. And I remember the CNN guy, man, he hated that deal because when he was bought out by Time Warner, he got paid in Time Warner stock, of course, and he became one of the largest stockholders. What the hell was his name? He was married to Fonda. Anyway, point being that we'll probably get back into those kind of over-the-top, insane sort of personality types. And I suppose you could argue Mr. Musk and all that. Yeah, Ted Turner. Yeah, thank you, Cheryl. He was all up in arms. But who was the AOL guy? And I remember, his name's totally slipped my mind. And it was really interesting because they were such a young generation, too. They were all young guys. And I remember the guy who owns the Dallas Mavericks, and he's Mr. Big Shot now. Was that the same guy? Yeah. He actually developed a software package called Real Networks, and he was bought out for $1 gazillion through that dot-com boom. So it's just interesting. Here we are, one generation later. Mark Cuban, thank you. Dropping names all over the place. No idea what I'm saying. Anyway, point here is through this cycle peak, in the dot-com space, and I think you're seeing some over-the-top, just incredible. You can't write better fiction than reality. I mean, this Danny guy, Daniele Esta guy, Magic Internet Monday, Wonderland, Time dude. Interesting their reference. Time again, interesting. Anyway. I mean, this guy, he's right out of a novel. Fucking, let's make some fucking money, man. I love it. I just love it. That's the human spirit. And that's, in a weird sort of way, that's actually what makes playing this game a lot of fun. I have a funny feeling we are all going to get to know Danny very well over the next few years. And he's gonna be a mover and a shaker. And congratulations to him and all the people surrounding the DeFi wave. I mean, you guys are riding this damn wave and riding it hard, and it's beautiful to watch. I suppose half of the sort of privilege I have working at TRI is I'm surrounded by a whole bunch of young guys that are all involved in the computer industry, and at least a lot of them. And, they're super gung-ho. They're, like, right in this. I gotta say, though, as an old man teaching new dog new tricks, I was given the opportunity to try and participate on one of these sort of DeFi things as it was coming out. And frankly speaking, literally, I just watched the bus go right by me. I tried to set up one of these wallet things. I was too slow, and I just, dawdling, and boom, off it goes. So in a weird sort of way with DeFi, and I remember it was sort of the same thing last cycle, and talking about crypto in particular, the 16, 17 kind of bull market. I remember, man, there were airdrops and stuff daily. I mean, it was incredible. The process, ICO and all that, right? So I think to all intents and purposes, we're seeing the same thing again. So, and then interesting, Mark Cuban, is he bullish on that time? So, you gotta give hats off to is Novogratz. I don't know whether you've seen over the past week or two, but his stock has completely bucked the overall trend. Like, I noticed, the Bitcoin ETFs and, coin and stuff like that, they're kind of stuck in ranges right now. But Novogratz is just like, F you, man, I'm heading higher. Look at that chart. I mean, gee whiz, Mr. Novogratz. So Mr. Novogratz won this cycle. And as a funny joke, I always tell people I was long his damn stock at $1, and actually I guess it was somewhere around here. And I bailed when it started to look like it was failing. Oh goodness, what a terrible trade. Anyway, way to go, Brian. But looks like we had to, and I've been talking people through this chart on the site. Pretty sort of very textbooky sort of bullish bot. Whether you play Galaxy or not, I think this is really a story about, and I'm sure he has a very wide, diverse portfolio of holdings, but I think primarily it's a story about Luna. I think he went pretty hardcore into Luna. So, Luna's done pretty darn well. And thankfully, people on the site, including Sjord, our TRI CTO, made sure not to let this opportunity go by. And that's actually a great anecdote of good fundamentals. If you learn the good fundamental story, then you get in on the fundamentals. And then if you can apply Brian's crazy reload zones and bullish divergences and buy W's and stuff like that, well, then you can sort of help time your purchases a little better so that you're not so stressed about the position that you're in. That's the way that rational analysis works. So if anything, this past 6-8 months, I think this is a perfect demonstration of why rational analysis is relevant in this world. Is you could have come and bought up here, let's say $21, and okay, fine, you doubled your money. But, the slicksters zipped in down here, and that's 10x, so is it of value to try and, time your purchases a little bit better? I think so. And then, of course, sell halves on doubles, risk management strategy, stuff like that. Just try and help anxiety of being invested in these insane names. So, but anyway, point of the matter here, I got off a little off topic, sorry there, is it looks like this DeFi, as expressed even in stocks, is where the hot part of the market is. Like I said, like coin, there's a W there. That's awesome. But, there's not nearly the rate of return. I mean, this is, 300, and now we're up at 330. 10% return on your money. Woohoo! I mean, Novogratz over that same, I don't know, what's that, 25 up to 40? So, yeah, that's about 40% return on your money. So you can see, Novogratz is kicking it here. And, if we go into the, Luna's interesting. They're doing this big NFT thing, and I think a lot of people on the site are super excited about it. Like I said, I tried to sort of do it, but I'm too stupid with this DeFi stuff. Kind of got stalled out, but hopefully maybe the boys picked up one of these things for TRI itself. But the one that really looks insanely hot here, actually it's calming down here a little bit, was this Solana. I think these are all the same price pattern, believe it or not. So you can see pretty well defined inverted head and shoulders. I can see, multiple higher lows. You can see the bot entry level. It's pretty straightforward. So we've already had move stop to scratch. You can see the pullback here. Never did get anywhere near that entry level, so there was really nothing to do. And then boom, we've jumped up now to this trading model in particular says that if you hit like sort of 2/3 of the anticipated move, then you probably ought to start trailing stops and starting to lock in profits. So how you do that, whether you use things like closes below moving averages, that's a pretty popular way to trail stops. I teach in my education program the 3 high-low method, which sort of keeps you insulated from the short-term noise of the market. You can also use things like average true range and the idea that if you have a price reversal greater than that number, then that reversal itself is an anecdote of sort of change of sentiment. Complicated, but the point of the matter here is, at this point, if you had taken this particular setup and, took a lot of guts to step in on the long side there, you shouldn't lose money on this trade now. I mean, that's probably the most important thing. So they're just working away. DeFi is just kicking it. I think, interestingly enough, I don't think anything really changes here. I think this is a good example of one that recently popped, and a guy that I won't name names, but basically bought the W down at the bottom end of the range, and he's just been spoon feeding out, and every time this silly thing goes and doubles from 3.5, so 7 cents, I hear a big woo, and then 7.5 up to 15. Guess what I heard about a week or two ago? Woo! And I wouldn't be surprised. And interesting, Foggy Boggy right up there at 34. So last double was like 15, 16. So what a coincidence! What do you think the odds are? We're going to hear some more woohoos. But really, this is just a conversation about risk management and how you pay yourself on the way up. I mean, it's the way I like to do it. Get yourself a risk-free trade, and then just slowly spoon feed the market as they work way higher. But this is a good anecdote of this particular market state, no doubt about it. The problem here, of course, is you have to recognize, and it was darn difficult, especially through the summer, right? You had to step in and buy here. That's where you had to be a buyer, all in that area. You come in and buy up here, that's a bit tough. I suppose you could argue there's a little bot set up from that. This doesn't make, it's going to get sloppy here. We'll go here, back to here, something along those lines. But please understand that as you are working your way up, those people that do like to sort of think this, okay, well, I'm just going to keep trend continuation, keep hunting bots as we work higher and higher and higher. Totally cool, totally logical, nothing wrong with that at all. But you just got to understand that you can only stretch the rubber band so far. We should be able to map all this out and go, gee whiz, looks like a pretty interesting level right there, and let's get long. In this particular case, actually, I think you've already taken profits. Whether you sell half on W, you sell the whole damn thing, that's up to you. But what I'm worried about is when you just keep going and doing another bot and another bot and another bot, and you just keep expecting it to keep working. At some point, we get into the point where, actually it gets really dangerous. Are we there just yet? I get the feeling I'm seeing a lot of anecdotal evidence that somewhere in this sort of November, December time period, that's when we should be thinking about toppies. I thought it was interesting in the lounge here this morning. I did see someone post a pretty interesting little comparison study of 17, 18, and when things topped out and how. So here's Bitcoin. This is back there. I think this is 2017, 2018. So we topped early December. Well, not early, mid-December. And worked our way lower. Here's Ethereum. You can see top middle of December, actually topped sort of early New Year. And I think this was sort of the tell when early New Year Bitcoin couldn't go to new highs, and then we started rolling over. I remember a lot of sort of guys actually who've made a lot of money trading crypto. They all officially turned like uber bearish in this area and in here. So be forewarned. If anything, what I would say is probably a lot of sort of maybe even, I hate to say it, even marginal ideas, sketchy ideas. Wonder whether if we do get this altcoin sort of blow off toppy kind of price performance, these are exit pumps, and this is sort of as good as it gets. Now, with regard to DeFi, I just don't know, to be perfectly honest with you, because if everybody goes and runs into staking and just, and they get these insane percentage returns, we might find that this actually takes a long time to play out. So it's just interesting how the market is doing this kind of parabolic move right into the cycle peaks. And I'm seeing it on a number of different names. Thought it was funny, speaking of very odd behavior, look at what this little one's doing here. It's kind of funny. Trex is still doing their delisting stuff. And there was conjecture on the site that this thing its days are numbered. I guess, I don't know. I'm the type of guy where I'll go and throw a whack of money at an idea, and since I don't put too much of my stake, I think I got like 5 G's in this thing or something, I'm okay just to ride it out. If anything, if I start hearing that Trex wants to delist it, I might just go, put the coins into like one of their NFTs. What's fascinating is I actually went to the site, and I guess they have like stuff where you can actually build NFTs on their site, which is kind of fascinating. I mean, it looks like the story's still alive. So I'm not saying that the idea is defunct. It's just it's dangerous when you get into these situations where they're only listed on one exchange for sort of like trading purposes. And you might even argue that the guys at Ubic, they don't even care about trading. Yeah, reload zone, reload zone. They don't really care. I think that there's money to be made here, but understand, and I think one of the reasons why it has kind of lagged is this name's only listed on Trex. So I did see it listed on another exchange, and it's interesting. It was like a wallet. I'm not even quite sure. You can look into it yourself. We can talk about it on the site later on. And they didn't have this Darth Maul candle on that particular exchange. So I don't know what's going on here. I don't even want to look into it because this is a weird sort of commentary on fundamentals and known fundamentals. I think on balance the story is relatively okay, but since it's only on Trex, is there some maybe funny business going on with the trading on Trex? Would we in the public ever know about that kind of stuff? Maybe. Is this one of these exit pumps that we're walking into as public? We don't know anything about this? Could be. Very dangerous commentary on capitalism. It's a really good story about capitalism. It's one of the main reasons why I say don't put too much money into any one idea. It's like this is one of the reasons why I have that 5% rule, because you just don't know in this game. You might be talking to guys, and even the guys that you're talking to don't realize that, hey, there's some funny business going on in the background. You just don't know in this game. So, UNIQ. Is that UBQ? I don't know whether that's the same thing or not. UBIQ. As I said, I went to CoinGecko because I saw the price action. I was like, wow, that's quite surprising. They're moving the coin 50% on the day. Wow, incredible. So I just sort of, poked around and sort of, what the hell's going on with these crazy kids? And I guess you can see there's Trex. They've got this Dove wallet and Quick Swap. So, could they be moving their business over to this Quick Swap? I don't know. I think it was this Dove wallet that I was, that's versus Euro, that I was looking at earlier as kind of maybe something's going on there. Interesting how they don't even have it versus USD though over there on the Dove wallet. Maybe that's why it didn't have that Darth Maul candle. I mean, it's tough to say what's going on here. I mean, clearly you can see this is a Trex story. So whoever's on Trex, they're having fun with it over there. Just be careful, okay? If anything, the irony of it all. This is the true irony of this silly game. How often have you guys heard me say that, well, usually these damn things bottom at 78.6 of their range. And in this particular case, we have a reload zone within a reload zone. So 78.6. That's where I'm going to buy. Let's call it somewhere between 18.7 and 22. Which would be, in hindsight, that'd actually be a pretty damn good level. And in fact, on this site, we have a name for this candle. Actually, it's not quite the same. So actually, no, that's not valid. And actually, this is sort of the made up number, right? So I suppose actually it's interesting that it's actually tradable versus Tether. So that's interesting. Let's see what it looks like there. Oh, there you go. Oh, that's a little better. Actually, I got to say, versus Tether, that doesn't look so bad. So, how ironic that really... as I said, I was a bit surprised the other day to actually hear somebody specifically say Trex is doing a whole bunch of delistings, and they thought this guy was coming up next. Yeah, it could be, and that's half of the reasons why people are kind of so sanguine about it. But fascinating how look at where that darn thing turned back up here. Fascinating. I don't know whether we get it, but it sure looks close, eh? This almost looks like a harmonic. Boom. 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 88.6. Isn't that interesting? No, can't call it a Gartley. 74.8, too much. We could call that, though, a bat, maybe? You know who would know that? Is Steven knows these levels. It's incredible to watch him. And actually, I'm totally going off topic here. I have no idea why I'm talking about this funny little cryptocurrency. I think it's something. It's so funny. Like, look at it on the list here. It's ranked 1166. I mean, what the hell is this piece of crap? But anyway, there are a couple Canadian guys that I kind of like. They're nice guys. I've known them in crypto literally since day one. I've gotten involved in crypto, and they're both in it. Aaron and Alex Sturck. And so they have a bit of a sentimental place in my heart. So my apologies for going down this rabbit hole on this funny little coin. But actually, it's interesting because this almost looks like, who could tell me, what's that 2-bar pattern? Is that a gap? Let's see. Oh, it is. Look at that. Son of a gun. It gapped. It's not really the best example, but it does have a wick and a tail, and they're just about equal. So, I mean, it's not the best example, but it is a valid example. And who can tell me, how does this trade signal work? I don't know, that's probably too vague of a question. But what I wanted to show you was Steven, actually. He, and I think I cleaned it up. But in the library, if you're a site member, and if you're in the school, you can access this harmonics. I used to have this like literally printed out and on my wall right beside my desk when I was prop trading crude. So where are we here? 78.6 could be a butterfly, so we might have to go all the way up to 127 to 148. So, which one was I thinking? Oh, yeah. So I got a funny feeling. Yeah, that's too big. So point D's actually got to be a bit lower. So no, I don't think we can call that a harmonic. Unfortunately, because this is beyond 61.8. We have to think that or where are we? That. So, boo. Yes, yes, boo. Anyway, and you can kind of see these. There's the market makers. They love to mess with the public on, especially if it's just listed on Trex. Ooh, be very, very careful of these kind of names, people. I mean, really, my question might be, how do I just get these coins off at Trex and just go bury them in the Ubix system? That's sort of been my question. Just go buy some stuff that these guys do with their coin, because I think the network's got value. I mean, it sure looks like a handsome little platform. Anyway, so kind of a funny little story there. We'll see what happens, but interesting trade location there on that Ubix. Let's see what else. We're supposed to actually, kind of an odd start to the video. My apologies, everyone. Brian, crazy old nutso. What do you guys got over there on YouTube? Hello. You think Arati says 73,000 on Bitcoin. Right on. Jeff Bokis. Oh yeah. What was his name? The AOL guy? Yeah. Didn't you think that inflation is already priced in? Inflation in everything? Yeah. Problem is, do you think inflation's done? I mean, what happens if prices go and double again here? I've heard a lot of people say that at the grocery store, you better get ready, especially us Canadians, that you might actually see prices in groceries double again from what they just did last year. So how do you know we're even done? How do you even know we're halfway through? I don't. I'll know when all these darn indexes and stuff start emming out and coming back down, then I'll know that the inflation push is over. I don't see anything like that. In fact, you look at your beloved Bitcoin. Use Bitcoin as a proxy. Don't look at it on a daily chart, but maybe look at it on a weekly chart. Oh yeah, that's not what I want to show. I mean, you just tell me. Well, how can I tell you, Brian? I can't see the damn screen. Sorry. Let's do one maybe where I have it written all over it. I know I put a chart out recently and somebody's like, oh yeah, that's clear as mud. Thanks, man. But this thing just made a new high here. So technically that in itself is still saying it wants higher prices. I mean, maybe this is a trap. But for me to know that this whole crazy inflationary pump is over is I got to see a top, like this. I mean, ironically enough, through the summertime, we actually went through a nice little sort of pause in the whole insane inflationary push. Like things like lumber prices came back down to earth and some, silly dog meme cryptocurrencies came back down to earth. It feels as though we're getting that push going again here. Can I come in on the buy side on something like this here? No way in hell I can do that. But having said that, I mean, just enjoy the uppie. We actually have, I think I showed you that chart somebody shared on this site, which I thought was super cool. Sort of the comparison of when Bitcoin topped out and when altcoins topped out last cycle. I wouldn't be surprised if you see something along those lines. And, this is DeFi. DeFi tastes great. That's what's driving the bus. And I suppose that's a commentary on Ethereum. So kind of the same thing what I just said there a moment ago about good old corn. Does that look like an M? Has the M come in yet? So let's have moving averages right there, right? Actually, that's interesting. I often used to, in fact, I think I saw, where did I see that? I guess that was candlestick patterns. The level oneers are doing candlesticks this week, and we should probably get onto their questions. But I mean, is there an M there? I just don't see. I don't see an M there yet. So. And if anything, I had sort of mused that I thought that Ethereum actually was going to be sort of this cycle's Bitcoin. And I remember I think it was November 2015, Bitcoin did almost exactly the same sort of thing. It broke out violently from the bottom that it was forming for like the past 6-8 months or so. And then came slamming, just straight line down, right into Mountain Man, right into that 61.8. And then just turned right back up and never looked back. You want to see what that looks like? It's it's just absolutely textbook. That was, but we better pull up a chart here that we can see. That was, maybe these guys weren't even alive then. No, I don't think they were. Nope, it was back here. I mean, you can't even see it. Oh yeah, there it is. All right, perfect. So that was this. And this was and it's interesting because there was a Silk Road was the 13-14 reversal, which is actually what I think is sort of similar going on right now. There was an auction of these coins, and the first one went off at about 600-700, and Draper got them, and then this was the second auction. And they just bid price up crazy. And prices just went parabolic. And then it just slammed right back into 61.8. And sort of the original bottom. And it just never looked back. I got a funny feeling that's exactly what we just saw on ETH. Just remember that image. All right, and then we go boom, and so if we go back, that's like that. It's almost identical. So, and actually this one was a bit of a piss off because I didn't get my fill here, and I had to be patient. I had to wait for it. I did get my fill here. I was like, phew. And sure enough, look at it. It's just not looking back at all. I mean, actually, the comparison is almost startling, eh? I don't know how I can do that. This guy, I want to go back and look at that Bitcoin chart again. So what was, yeah, right there. So actually, this one straight up, then back down. So it made like a triangle over a very long period, and then boom. This one, I don't think we made the triangle, did we? Well, no. So you can see there was actually the top, and then we said Bitcoin, it kind of went like that and then broke out. This guy just quick pullback, away we go. And actually, it's interesting, this pullback right here and the away we go, I figured I actually left a really cool trade on the table there, which kind of pissed me off because it was just so perfect. And I was telling stories, you know, weeks and months ago that I decided to move myself, and I did it manually, and I'm getting old now, so it really wasn't a very smart idea. And had I just, you know, hired movers and just let them do the physical labor and just been at my post and, you know, tweeted out, you know, double RLZs within RLZs, W breakouts, get in there and buy, and man, how much money did I leave on the table? Quite a bit. Oh well, hindsight's 20/20. So, you know, that still looks pretty uppy. You know, it's really cool. And, you know, people looking for free information on these weekly shows. This simple moving average relationship will keep you out of a lot of trouble in this world. You know, if you want to use that, let's do the stock market just as a simple illustration. So during correction periods, what will end up happening is the 13 EMA on the weekly basis, it'll cross back below the 30 SMA. And at this point, really, you're best just to hop on the sidelines. Just get out and just leave everything alone. Maybe go into T-bills, bond, short-term treasuries, 2-year paper, that kind of stuff. Then when it turns back up, all right, it's safe to get back into the pond. And a lot of people get really chopped up with that, or not, you know, pissed off that, hey, Brian, I mean, I got filled here, and now I got to go buy it back there. And what they don't see is this, where really what this moving average system is trying to illustrate are the periods like this, where it's just one directional. It's one simple signal. Just get long and stay long. Don't touch it. It's fascinating how just even in that September correction that we had there just a few weeks ago, there really was no signal to do anything. If anything, the worst part about this is on moving average checks like this, that's actually, you know, buy the dip, all that kind of talk. And you can see how this works over time. I mean, that was an okay rally. But look at this one that started like when Obama came into office. You can see the chop, actually, yeah. So, well, actually, there was a couple. So there's the turn. That was basically, we're going to do quantitative easing and save the market. And then, you know, better get out. Wait. All right, nice W. Time to get back in. Then, oh boy, things are looking troublesome. This is an interesting one. Where did you get the signal to get out? All right, these things actually, and the problem is this is a 13 EMA, so future price action actually affects how this candle prints. But let's assume that, all right, maybe we got out on a break of this candle's low on over here. Okay, well, that's fine, somewhere in there. All right, time to get back in. That one did okay. And then, you know, this is interesting. Look how this never crossed back bullish or bearish again. See how it came close, don't get me wrong, but it never crossed back bearish. Look at, you just would have been stay in the market, 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 stay. Oh, finally we got our signal to get out. Isn't that interesting? And then your signal, okay, well, time to get back in. Basically the same level. And look how long you stayed in the market. Stay in the market, stay in the market, stay in the market. So as you can see, hopefully, interesting example, didn't cross. All right, there, we finally crossed. Boom, okay, get the hell out. Interesting how, okay, cross back bullish. Roughly the same level. And now again, here we go again. Stay in the market, stay in the market. All right, boom, we got told to get out. Where you got out, remember, this was chaos. This was the definition of chaos if I ever said it. Remember Mr. Orange Hair standing up there going, oh, no, there's nothing wrong. And it's interesting because the level 3ers, we just did short options and we just did institutional participation on puts and, you know, the fact that they basically do all the options business. And you could clearly see I was tweeting it out like crazy and yet nobody would listen to me. There was a massive transfer of wealth. Just even on this one issue is like $7.5 billion transferred hands right through here. Remember Cool Kelly Loeffler and the insider trading scandal of the Senate and all that? There is the end result. So actually the level 3ers, we had a really cool conversation about insider. You actually think this shit isn't rigged? Come on. Yeah, well. Anyway, so point of the matter here, I was just going on about this moving average system. So you got actually a long signal in the stock market coming out of all that shit. What a surprise. And Wall Street's just loving it here, right? I tell you, anytime you hear that the stock market is going to just get a blank check from the politicians in Washington, write this down. Great Dill Moody, write this down, right? Shouldn't we debate mortgaging our kids' future? Shut the fuck up! If you ever hear that, that is the biggest fucking buy signal you will ever get in your life in risk assets. It's just that simple, folks. And that's the brutal part about this game that they won't teach you in high school. They won't teach you in college and university. It's all rigged. Sucks, but it's true. So, you know, when did the stock market bottom come in 87 after that crash? It came in the day Alan Greenspan took short-term interest rates to nothing and said, you want money? Fine. You can have all the money you want. Merry Christmas. Stock market bottom, straight up it goes. 2001, same sort of thing. Fed came in, totally took interest rates to zero. Of course, they had some interesting side distractions through that particular cycle. Oh, this particular cycle, they had to hit the reset button. We've already played the terrorism card. The public's not going to buy that bullshit anymore. All right, what kind of story can we come up with to try and justify this go-round? Do you see how this is all a damn game? Oh, well, what can you do? Point here is, damn, that's a pretty damn good moving average system for investing. And off of weekly charts, it's such a killer system. So, let's go see what it says about our beloved coin. Coin? Corn. Kafka. Interesting. Turned bearish actually back here in the, what is that, June of 21. And here we are. We've turned back bullish. So that's good. Yeah, feeling pretty good about this. We'll say, man, this is one volatile asset. I'm not going to kid you there. Encouraging to see that we've turned back bullish here. And I suppose you could argue, you know, just really simple harmonics, A, B, C, D, you know, rallying up top here. That's cool. Interesting. Did Ethereum actually turn back down there? Let's see. No. So look how Ethereum, sort of the DeFi story, it didn't even blink there. Isn't that interesting? I mean, damn, look at that. Didn't even blink. Fascinating. Of course, you know, hindsight's 2020. Look at this cute little W down in here. Wow. You know, if you can get to the point where you can see these signals and you can act on them, oh, goodness. Tough. I'm not going to say that was easy. There were a bunch of names. Like the name that I did through this turn here, I think probably the trade for me was, the example was that Luna. So I stepped up and I forced myself to step in and buy in this. So I participated. I think it was a pretty good demonstrator of best practices on the site. It's interesting how this thing did waffle in here, though, a little bit. And then the moving average just turned back up. So, that is interesting, too. Through here, there was a bit of a controversy in this thing. But I guess it's been able to shrug it off completely. So, anyway, fascinating to see this Ethereum never did slow down here at all. Of course, there's Brian's crazy levels. So, as it stands right now, just, those people going, yeah, but where's it going to go in the short term? I mean, like, I would know, but some thoughts. Did notice we've got, we actually did this on the Bitcoin rally when it ran up to new highs. Where do we stop? Is this a classic A, B, C, D? Which would give us a target of basically $1,500, which is a big fat round number. I mean, that makes sense. Do we rally up to 5,500, 127, or do we work our way all the way up to 63 and change, which would be massive? These are alt A, B, C, Ds, but they are technically valid harmonics. And if we actually just use that sort of connect the dots kind of thinking. So we probably got to be thinking up in this area. 10 Gs. The interesting thing about this chart is I actually think the behavioral pattern of Ethereum looks very, very similar to the behavioral pattern of Bitcoin last cycle. So here was Bitcoin in that 17-18 cycle. And there's Ethereum and that Bitcoin price action overlaid. And I do find, it's kind of doing this sort of grinding higher highs and higher lows. At this point, right? And at some point, they're just going to go, release the hounds! And the damn thing's just going to go apeshit to the upside. No idea when that happens. It looks like, it's awfully tough. How do you zoom in on this and do this justice? I'm just sort of playing around with you guys here. But you can kind of see, big surge up, then pull back, then surge up, which is kind of like that, then pull back, which is like that. And here we go. Pushing higher. Who knows how high this damn thing can go, but wow, holy moly. I doubt it's doing that, but who knows. One thing I've learned in this business is don't get into the habit of sort of predicting the future, because the future will often do something that's so astounding that just makes you go, I can't believe it. And the only way you believe it is because it's actually reality. And if I told you what was going to happen, now you'd go, there's no way that's going to happen. Brian, what are you, crazy? So, maybe. The interesting thing, we've been following this Bitcoin study. Gee whiz, that sure looks like that, eh? Are we about to go absolutely insane face rippy here? I don't know. But there it is. Kind of zoomed in. And it was interesting, right? Because this was the Silk Road reversal low. And people made the argument that on this event right here, the Willy bot was released. And it just relentlessly bought. Knowing that Karpelis had actually already spent the customers' money and never did buy them their Bitcoins. So he was going to have to come in and buy people's Bitcoins if they were like, okay, I want to withdraw my Bitcoins now. So they knew they had him caught. And every day the price of Bitcoin went higher and higher and higher was just a further and further and further nightmare for the guy. And until eventually the whole damn thing broke and he's like, I don't have any of your money. Sorry, guys. And poop, the bubble popped. So... yeah, so it's good to know there are market professionals in this game. Okay. Like I said, I don't know whether it's in anybody's best interest. You should write that down. Whoever just said that is write that down. Maybe even put that tweet, Werner. Put that in a tweet or something like that in a quotation marks, and then let's come back and let's review that in 6 months' time and let's see what actually happened. But that's cool. So Werner says 15 to 30,000. Merry Christmas. Okay. We should really get on to the questions. That's what I'm supposed to be doing here today. I don't know. A whole bunch of rants. Some people actually enjoy my rants, so I hope you got a little bit of value out of that. Definitely think the market's pointing up right now. Do not get in front of this thing. I will say, though, that as I've pointed out repeatedly on the site, you never know exactly when the hell these damn things are going to break. I mean, you just don't know. I wouldn't... what am I trying to do here? I wouldn't go into the business of trying to predict these things. Just, the market will top when the market tops. It's just as simple as that. That's TRI PMA. That's sort of like the official TRI Twitter stream right now. If anything, I kind of like this. And Josh, who's sort of taken over this job from Kevin put it together. And then Josh sort of took over. I got to say, I'm so proud of these guys. This is exactly what TRI needed. Was sort of like a third party, unbiased, just spitting out the shit. It's interesting how even the public, though, they're actually holding Josh to account, going, "Are you sure that's the right notation?" I thought that was cool. So, if anything, this will actually make Josh even better at his analysis and his write-ups and stuff. But I'm very proud of the work that these guys are doing. But I have that as the default on this site. That's where I'd like people, if they go to the site, for them to go. If you want to follow me, of course, I'm a little bit of a nut, a bit over the top. So just be forewarned. Okay, now what was it? Oh yeah, the Benner chart. You can actually find this on my feed here. I think that's it. If you ever need this, hopefully, maybe not. I don't know whether I spelled that right or not. Let's see what happens. Nope, obviously I didn't do that right. Be interesting to see. I could have sworn that's what it was. Isn't it Benner? Benner? Maybe there's an A in there. Banner? Darn it. Anyway, actually, you know what? There's a better way to do this. Let's go there, and then let's go there, and then way back when, forever ago, I tweeted it out. Let me just find it really quickly. I just need to reiterate this. Like, if you see this kind of price action, try not to be goaded into thinking that this is just the way that it is. My hunch is after this sickness has sort of been tackled, the higher ups will try and sort of bring in some stability to prices and maybe a little bit of credibility to the Fed, because I think they've lost a lot of credibility through this. And you might see, a bit of austerity as well too, if I understand correctly. I don't think that the big socialist push that was sort of initially envisioned, even a year or two ago, remember there was like MMT money and that the socialists, you remember, there's out of Dearborn, Michigan, I think it is, one U.S. House of Representative lady, just stunningly left-wing. I think actually there's going to be a pretty violent reaction to that, going the other direction. And once this sort of this midterm election comes along, does anybody have a date on when those midterm elections are supposed to be? Is that like 1 year from now? But I do know that every 2 years the U.S. House of Representatives, a whole bunch of them flip over, and then I think every 6 years a big chunk of the U.S. Senate has to get voted. So the point of the matter there is just that my hunch is this little socialist push that you've had in the U.S., I think it will come to an end here with this next midterm election. So we'll see how it goes. I think I saw the most recent sort of midterm election results. Republican and right-wing politicians came storming in and won a whole bunch of elections. So my hunch is the electorate isn't nearly as socialist as the rhetoric around removing Mr. Trump from office was. I don't think it was. It's the same thing as I don't think the American public ever really wanted Donald Trump as president. They just did not want Hillary Clinton. And people just can't get over that. So when the next election came along, people were like, well, we never really wanted this Trump guy anyway. Well, maybe we'll try this Joe guy. And for some stupid reason, left-wing politicians, they were just like, okay, this is carte blanche. We can do as much socialism damage to the system as we can. And of course, the bankers, they love this because that's just music to their ears. We're playing right into their hands, dilute the currency, inflate prices. They don't really care. Profit margins continue. Yep, spot on. The point being that I think we're going to have a bit of a backlash to all this insane socialism here. The worst part about it is it's either belt tightening, which means less jobs, which means less economic activity, which means, a little bit of starvation, falling equity prices. That would be the healthy, the good thing. Or, no, we'll just keep diluting, keep printing money, and they just simply rise grocery prices, commodity prices, stock prices to offset the dilution. In fact, you might even find stock prices just go sideways. But they go and print another gazillion dollars. Bitcoin goes zooming up into hundreds of thousands. I could very easily see that scenario. Totally. The point being that we just have to respect the fact that 2023 on Mr. Benner's chart is right here, right? And we just went through that peak in 2000. Ironically enough, I showed you, actually I don't think I showed you guys, but it is in the Twitter feed here if you want it. The information here, people, it's legit. It's sitting here. I don't even bullshit you. I even say as it's happening, holy shit, look at what they're doing. So you can see this. I absolutely guarantee you that, let's see if I can find it. Bing bong. Oh boy, Big Brother's coming to get me. Where the hell was it? It was, I just showed it to all the students. I mean, it was shocking what they did. And the funny thing is these tweets, nobody's interested in this stuff. That's what kills me. Here it is right here. I think it's right. Oh, darn. Well, here is the after the fact, but I thought I had another one in here, and it's like January 20. I just was showing. Here it is, right here. So this is January 16th, 2020. So does it make sense? If you're a smarty pants, oh damn it. I lost the Benner chart. Anyway, smarty pants, you saw that the Benner cycle peak there was 1920. This is exactly what happens. This is 2019, the peak's in there, and into January, can you see the massive amount of wealth that was basically transitioned from the 1% to the public? Public buys call options. Hey, gotta buy a call option, I'll get rich. All right, fine. Everybody gets encouraged. Buy calls. Who's writing all these calls? Well, smart money who probably owns the stock and they want to sell it. So where do they take the market out? Basically right at that level. And you want to see how criminal this is? Like, first off, I mean, we just assumed. Somebody do the math. 220, what is that? I beg your pardon. 227,800 call options on the SPY at $330 strike. How much money are we actually talking about in this one option on one instrument? How many of these ETFs are there out there in the world? How many Dow stocks? How many S&P 500 stocks? Every single one's exactly the same thing. This is $7.5 billion on one option, on one issue. So you can just imagine across the entire stock market how brutal this was. And what happened following? Keep in mind, the market exercised this option right at that level. All these people bought. Merry Christmas. You just bought the S&P 500 at 330. Now, this is terrible. I mean, look at what they did. Where can I show you this? So this is it. I mean, Brian going off on his stupid tangents. I'm sorry. I'm just having fun with you guys. But nonetheless, this was that options event. So in essence, right, look at what they did. This is criminal. That was tweeted right there. So basically 1% sold the public just a ton of stock. I mean, just staggering amount. And then mysteriously, all of a sudden, the market collapsed. And do you think they went with all that money that they got? And they just went and bought those positions back as soon as, shouldn't we debate the future of mortgaging our kids? Shut up! Right? Give us this money! And boom. I mean, what was the profit margin? How much money did the 1% just basically clip from the public there? I mean, it's staggering, the numbers. Absolutely staggering. All right, anyway, I'm not quite sure why I went down that rabbit hole, but I really was supposed to be talking to the students here today. I'm probably making all of you guys go, yep, I'm never buying stocks again. I am 100% DeFi. Get me the hell out of the system. Okay, here's your questions. So, 7th of November, I think that's where we are here today. Yep, there we go. All right, so 7th of November. Hi, Brian. Previous BCS, you mentioned that we should not be letting a winning trade turn into a losing trade. Yeah, generally speaking, that's a good idea. Then you said if reach 50% of expected movement, move stop to break even. Stop loss to break even? Okay. My question is, 50% of the whole movement taking into account the risk window or 50% of only the winning window? Yeah, it's 50. It's from the entry to the exit, 50% of the potential profit. So, yeah, if you're going to enter the bot here, then I like the idea. Ironically enough, 66% is almost exactly 50% of that, like 33 to 66 to 99.9 would be basically that 66 is almost half of that. This particular setup, the bot, it's got its own rules unto itself. So, I mean, I don't want you breaking bot rules. I think that's a good idea. But the idea of, if I'm going to measure, like, especially if I'm doing the day trading program, if I'm trading a bot setup, I'm just going to follow the bot rules. And the bot rules are very explicit. You know exactly if 50% is hit, 50% is hit. But if I'm day trading, and I think I had one on Friday, that was a good example. Yeah, here. So if I'm day trading and I see that, especially if it's like a 50% retracement, there's my entry, there's the target, and that's what the 50% rule is there. So if I see that the market has moved 50% of my anticipated move, then I don't really want this thing to come back on me and bite me in the ass. It's just that simple. So actually you can see just slightly different numbers there. I'm not quite sure why. Oh yeah, because there's the entry there. So in this particular case, 50% of my anticipated move to the 50% rule, and I'm not going to include my risk window. I'm not going to include that risk window in that. No, it is 50% of my anticipated profits. The bot, I'm going to leave the bot as you pointed out there. I think you just leave the bot as it is. You work with the bot as the levels are pointed out. Now, keep in mind, when you're trading the bot, what I like to do is, frankly speaking, and it's tough. I'm not going to say it's easy. But what I actually like to do is I actually like to try and sneak my way in, if I can somehow do it, slightly lower than the 25 level. Now, that would have been darn difficult on this. I don't see that that's even realistic. But had you been able to do that, in this case, I think you got to go in at the 25 level. I mean, it sucks. So, boom, move stop to scratch. And if this thing came back down to that 25 level, because I had entered off that and I probably would have bought this double bottom level, I would have to walk away. Sucks. And here's the thing is just because you get stopped out, that doesn't necessarily mean the damn thing's going to stop going down or start going up or whatever. And I see a lot of frustrated new people who use the bot go, oh, I got stopped out. What a piece of shit system. Never going to use it again. But they don't understand why. In a weird sort of way with that bot and those trading rules, it takes the thinking component out of trading for me. I think this was the setup. And especially in sort of the high anxiety prop trading kind of world, man, you don't want to think. Don't think. Thinking is painful. It hurts. It often gets you into trouble. I hate to say it on this one. I like to do AOC orders, buy on stop, that kind of idea. So I do like this double bottom level, which means you actually would have gotten a little bit higher. Oh, how frustrating. And then notice, look at, they put in an empire again off that same damn level. So I think the entry on this is such a pain in the ass. Look at that. And then they put in an inside bar reversal just above the level. These jerks. Like I said, ideally I want to get it to come in below that 25, but there's just too much demand for this damn thing. Move stop to scratch. So I think if it came down, and it's not where you entered, it's move stop to the 25 level. So if it comes down, tags that 25 level, then really I think I got to walk away. And, I think you can understand why. This might actually be just a big honkin' M up here. And if we fail here and we start coming careening down, that might actually generate a massive sell tsunami. So in this particular case, move stop to scratch would be move stop to 1435.60. You might have actually even lost a couple bucks on this because you just couldn't sneak your way in very well there. Having said that, as you can see, we did not turn back up. Now move stop to trailing, and as I was saying earlier, you could use the 3 high-low method to keep yourself into the trade. You could take the chicken shit route and just say, look, if this M's out, I'm so gone. You could use a moving average close system, but you can see even here, close below the moving average. Oh, I'm going to get out. And then the damn thing turns back up. Moving average systems, they're okay. But sometimes they can get you out at terrible levels. So, what's the white MA? This one here, this is the 30 SMA. So remember I just walked you through that weekly talk about the 30 SMA and 13 EMA as a trading system. The irony of it all is that sometimes on the daily charts, the lower time frame charts, you can get chopped up with this moving average system, so it's kind of painful. On the weekly basis, it works beautifully. And then this is the 200 SMA. So I like to use it as sort of a keep it honest indicator. It's usually it corresponds nicely with things like 50% rules. So notice if I did a 50% retracement of this range back down to here, 50%, there's 200 SMA. They often work well. And actually, and I'm going to try and do this in the coming week because I think Sjord said that this is now up and running. This is why one of the screening criteria that I have is either show me a reload zone or show me a close proximity to a 200 SMA. So, and this will be one of the screeners that we'll have in the sort of tool belt. So you can see somewhere on here, I have screener set up. Here we are. So daily double bottom and 200 SMA as target. So that's kind of, if you can't do fibs, if your screening machine can't understand fibs, you can often use a 200 SMA as sort of that 50% rule kind of proxy. And that I used to build trading systems where I would just simply ask, can I have a 9-period EMA cross above a 13-period EMA, or some sort of fast signal? And both of those moving averages are about 20% lower than the 200 SMA, and actually that's a really cool little trading system. Anyway, I digress. Where were we? Is the person who asked this question here? Did I help give you some stuff to think about? Who is this? Okay, then you said, my question is 50% of the whole movement is okay. Okay, so with El Tangonators, it's the trade part, not the risk part, like the profit part, but not the risk part. With the bot, it's the whole range set up here, as you see. And in fact, I might even, but since you already have the move stop to scratch level there at 50, I might even do up a 50 and just go do a double check. Well, if we hit 50 and then we hit the other 50, I better make damn sure my stop's at scratch. You really don't want to get into the habit of seeing a market go up a big chunk in your favor, big green, and then at the end of the day, oh, actually I lost money. Especially if you're prop trading. Keep in mind, you're under a lot of pressure to perform for those people. So it's psychologically damaging to have those kind of days. It takes a toll, I'll tell you. They always use, one of my prop guys used to always say, scratch, second best trade. Nothing wrong with being a scratch trader. Okay, I asked this because in another video you mentioned only the winning window and not the whole movement per se. All right, so hopefully I just talked a little bit about my contradiction there. And I've given you some food for thought. All right, yeah, so the same sort of thing. Okay, hello Brian. Why do you say big red bars in volume are a bearish sign? You could say that big bars mean a lot of transactions and interest for the asset, and the color is just signaling how the bar closed in that specific time frame. What am I missing? Thank you. What I would suggest you do, it's a little bit advanced for you in the level 1 program. But what I would actually suggest you do is look into a concept called accumulation distribution. And interestingly enough, it's called the AD line. I think I make reference to it in the class video. I can't remember whether I did or not. And, if you actually break apart how accumulation and distribution index works and sort of the mechanics behind it, the general theory is that actually the way that the candle finishes is very, very telling of what that volume is. And the irony of it all with accumulation distribution is it doesn't even have to be an up bar. It could be like a shooting star with a green candle base. Accumulation distribution says, well, if that was on heavy volume, somebody sold into that rally, and created a huge wick of a shooting star, if you know what that is. I think we did candles recently, so you should know what I mean. Hell, I can just show you, right? So, you could even use this chart right here, right? This wick up here, this is very telling. Somebody sold into it. Now, if this wick was on massive volume, well, it shouldn't surprise us that going forward, there was a rally into the wick, but whoever sold this wick to create this wick, they also sold here, and that was it. And then, more specifically, this price action. This right here, even though it's a green up bar, actually because it looks, and I don't know, it looks like this is more than 50% of the range. There, accumulation distribution would actually, especially like this one right here. It's a green bar. It's an up bar, Brian, but what the hell? Well, believe it or not, that's actually a bearish bar. It turns out there actually was a bit of resistance up here, and we had to clean up. You can make the same argument on the bull side, right? If you have a big tail like this. This was a, accumulation distribution. If we finish more than halfway up this tail, actually that's accumulation. And then again here, this is a really good example. This is actually accumulation. Now, if this is done on heavy volume, oh boy, huge signal. So how a candle actually finishes is incredibly important for direction. If you couple that with massive volume, then the signal becomes even hugely significant. Volume speaks volumes. No doubt about it. So, and then ultimately what we want you to do in this education program is we want you to juxtapose not only the volume impetus signal itself, but also the on-balance volume indicator. Now, I like the on-balance volume indicator, so if we use, like this here, for example, I think I have all these. Yeah, here we go. So what I need for you to actually take away from this, and we'll put price momentum away for now. We'll just talk volume momentum. What I need for you to take away from this is you see the red candles, right? These red bars. This one here, for example, good example. Just as I said there a moment ago, if you see a big wick like this, and actually if we finish down less than 50% of the candle, that's a massive distribution candle itself. This clearly is, market was moving higher and it ran into a brick wall of sellers. You add to that, you look down at your indicator and you see a big red bar which breaks previous bars, i.e. volume impetus. The bears are wide awake and they are rocking and rolling. And then the final piece to this is you just simply ask, what is my OBV indicator telling me? And it's telling me, wow, volume and participants are getting out. Market structure, lower highs and lower lows defines a bear market. So, and interesting here, another volume impetus signal, the bears are in control. We look at the OBV, and this day actually pushes the indicator to new lows. Hugely bearish. Liquidation. People are getting out. And you have to respect that message. I mean, look at what happened following. Now, notice what happened here. It looks like things are turning back up. The sellers they exhausted themselves. Where are all the big red bars? Why aren't they selling here? The sellers aren't interested in selling here. Who is interested? Well, I see, green bars. Hey, a little bit higher, a little bit higher, a little bit. Hey, the bulls are actually coming back to life. Fucking A. And then all of a sudden, the bears, we're still very much around here. Is it important to listen to this guy that he kind of said, you bulls, you're having fun, but hey, I'm driving the bus here. Boom. Well, you look at your indicator, it was moving higher. Oh, big crap out below that moving average. Sort of initial damage, right? Things are, we're still working up, but oh boy, the bears sure came along and punched us in the nose. And then, and this is the thing, right? Can the bulls step up and take over and push this thing to new highs? And look at what happened here on the indicator, right? This is, hopefully you see, this is like divergence. It would really all depend, of course, on what the price is itself. But we didn't go to new highs. And then, oh no, look at this. There's an M coming in here. And that's, on this day right here, this bar right here. So you tell me, when the bears saw this M come in here, did they kind of go, you know what, I better sell some? What do you think? Did the bears show up? That's a pretty darn big candle. It's a pretty darn big candle. Look at your indicator. What's it doing? Oh, that's pretty bearish. And I mean, I don't know. What did price actually do? So, where's that? That is right here. Right? Ooh. Now, the interesting thing about this, and I would definitely say, especially here with the bear rearing its head, I'm awake. Look at that big down bar. The bears really punched the bull in the nose, and then they came back again. More bear, puke out. But notice, and price is heading lower, lower highs and lower lows. The bears are in control. But then notice, as we're sort of muddling along here, hey, where'd the bears go? Where'd everybody go? And this is important, right? This is the visual evidence that the market has just fallen asleep. Everybody's lost interest. The bulls have lost interest. The bears have lost interest. And what does the market do? The market just drifts sideways. Now, interesting how we started to ramp up here. And interesting through the drift. Higher highs and higher lows. Things are looking bullish. Higher highs and higher lows. Things are looking bullish. Then the bears had the audacity to come back out again and drive our indicator down. And that was this event. Let's see whether the bears actually stuck around or whether the bulls came back to life here. So we have the bears kind of disappearing. And actually, I think this is a really good example of it takes a while for the bears to fall asleep, but what we really want to see is lower highs to actually get sort of visual evidence that the trend is established. So you can see one high, two highs, three highs. 1, 2, 3. Now what this means is if we get a red bar, a down selling bar that's less than whatever the lowest low in the red bars here is, it means that the bears have officially fallen asleep. And notice that's basically that low there. So here the bears will fall asleep if we do a down day less than 4.324 million. And lo and behold, we did 4.377. Oh, so close. So the bears almost fell asleep. Didn't quite, but almost. Interesting how we're having a down day here. If we do less than 4.324, and right now we've done 2.221. Oh, it's tick back bullish. Stay red. Stay red, right? We want to see the bears actually fall asleep. Thank you very much. So if this day can be less than that bar right there, then actually that is a great sign. It means the bear has calmed down, right? The massive selling pressure that you saw here is abating. Now, for this to be a new bull, we got to see the bulls also step up. And unfortunately, what I see right now is I see that it looks like the bulls have also fallen asleep. So everybody's kind of like, what's going to happen next? And the only way you can really see that is we actually have to go into the actual volume. And we have to just put the bears away because they're dominating. And now if we do that, we can actually see the bulls. What are they doing? So notice, remember we said there through that last month or two as DeFi was working its way higher, Solana was coming on, Luna was coming on, various different DeFi networks. Notice the bulls, right? They're making higher highs and higher lows. You can see it, rising volume bars. As long as that kept happening, the bull was in charge. But notice, remember we had those big honking red bars. Notice the bulls. Look at this. We had potential top, then, okay, that's good. They kind of broke that. Remember, that was that big red bar. So we're kind of like, we haven't fallen asleep entirely. Still here. But then, lower high. And then, geez, where the hell the bulls go? And then you can use the same logic here, right? If we see 3 lower highs and you see looks like this, whatever this trough is, if we see a green day where it does lower than whatever the lowest bar here is, in this particular one here, it's 6.012, then that says that the bulls have fallen asleep, and you can see, bang, right there, 3.75. So as of this point right here, I would say the bulls have officially fallen asleep. Right there. And it's incumbent on the bull. It's got to wake up and start printing higher highs and bigger volume bars, that the bull is actually in charge. If not, actually, this is a bit dangerous. This is technically in divergence here. We're not getting huge pushes higher here in volume, taking us higher. That's not a good sign, folks. So we'll see what happens here. I don't know whether I really believe the market. What I do like, of course, is, had you forced yourself to come in on the buy side, and this is why I like using these kind of trade setups, I would look at the indicators and I'd go, gee whiz, this looks awfully suspect. Something's not right here. DeFi index is moving to new highs, but the OBV is actually in bear divergence here. You just did the module on OBV. Tell me, is a bearish divergence in OBV a good sign or a bad sign? Come on, folks. Don't kid yourself here. We need to see the bulls step up and step up hard here, please. Like I said, I actually think the bull's asleep here. So, point of the matter, I would just simply say, like I said there a moment ago, half of the reason why I liked using the bot was it had built-in rules. So at this point, I would be trailing stops. And if this thing did crap out, then okay, fine. It craps out. I walk away. Maybe I have my stop below this low right now. That would be my chicken shit M kind of stop, or I 3 high-low method. So I have it way down here. But the point is, if this does crap out and the bears start coming charging back out again, I can get the fuck out. I tell you, I don't like the look of this. There's something not right about this OBV here. So actually, it's interesting that you kind of mentioned that we go through this. Let's keep an eye on this. You're in the education program right now. You've got probably another month or so that we're working together. So let's keep an eye on this study and let's see how it plays out. But I'll tell you, I don't like the look of what I'm seeing here. And I've told you guys before, man, Big Brother, are they going to put up with just all the kids making tons and tons of money in DeFi and not giving a crap about SEC and is this a security and stuff? And is Big Brother going to let them get away with it? My gut is saying no, they won't. But the question is, does this thing have its blow off top and huge monster rallies and all you guys get rich before Big Brother drops a hammer? I don't know. Fascinating. If I'm a bull here, I really want to see the buyers step up here. But that's actually a really good study that we looked at. Let's take a look at, also too, keep in mind, this is a DeFi perp, so I'm not even quite sure what the hell that means. Let's take a look at Ethereum. Everybody loves Ethereum. Because this is DeFi space, we'll probably see similar type action. Yeah. So I look at this, and if we use that sort of 3 lower highs in OBV, that's 86,000. This is 74 and 79, so that is lower than that 86. A lot of selling. It was relentless through here. Be interesting to change that to like a 2-day. Does that actually print as a, where the hell is that? Geez, that doesn't even show up here, right? Big red bar there. Actually interesting. Look how there's just not a lot of buying interest here, right? This is, if anything, that's a little bothersome, guys. I don't like the fact that the OBV is so quiet here. Actually, not even OBV, the actual volume bars. And maybe also 2. That's a 2-day chart. Maybe that's a little different. Let's see. What does a weekly chart say? So we had a big volume surge to the upside over here. And then not so much selling pressure through here. That's lower than that level there. We'd really, if you're a bull, you'd really like to see the buying bar push through this high here on a weekly basis. That would be very, very bullish. I think I think it's the first week of December. That is about 1, 2, 3, 4 weeks away. You're going to have the ETH micro contracts listed by the CME. That might bring in some new business. Is it enough to really, what we really want to see is, look how it's making higher. Look at that breakout in volume right there. That's really what you want to see. Let's see, what did that translate to? That was right there, right? And look what it translated into. That's what you really want to see. And if anything, the person who asked the question about big chunky bars and how they validate what you see in OBV, that is what you want to see. And I hate to say it, If you see a big ramp up in red bars and it's breaking the market down, kind of like here, you see how big ramp up in red bar, kind of breaking down. Well, look what happened. I mean, in this case, we just went sideways. Well, that's okay. If we had gotten more red bars and more red bars, well, this thing might have cranked down. So, let's see if the daily chart gives us any clues. Like I said, a little suspect here. I gotta say, this does not fill me with a lot of confidence. If this thing was so great and it was so awesome, where the hell are all the buyers? So that's a little disturbing. And then as we had kind of pointed out, we are getting, it's not confirmed yet. If this turns into a confirmed divergence, oh man, talk about end of bull markets. But you can see how this double top, now, you know, there was a potential one, actually, and it's even over there as well, eh? But there was one there, so are we going to roll over? Nope, we broked out. Broked. Nice talk. Okay, so we just broke that high, so now we go up here. All right, are we going to M out, break it? The point here is the divergence it confirms here. And what it would probably be is we got to have a whole bunch of massive selling, right? That just drives this OBV down through those lows. And if that happens up top here on this big div, then I think the bull market's over. So, not here yet. Don't have to worry about that kind of thing right now. If anything, what you really want to see, like I said, I mean, like this volume picture, that's not right. You want to see this thing ramping up here. What I see here is it looks like everybody is gonna just about to go comatose. And if that's the case, then we probably get something like that. So come on, buyers, get in there and buy. Turn those machines back on. You know, if we can get, you can see, like there was a high there. There was a high there. There's a high there. If we can somehow get this thing to break out through there, then we know, oh boy, away we go. But it's just not coming in just yet. And you can't really force this. It'll happen when it's supposed to happen. I know that's kind of a cheesy answer. Look at this turn here, right? So you can kind of see, when's it going to happen? When's it going to happen? When's it going to happen? Look how it turned here. Right? When's it going to happen? When's it going to happen? When's it going to happen? When's it going to... Woohoo! Right? And look at all this. Just one directional movement in volume. Look at that volume pattern. And that's what I'm talking about, big chunky bars, right? All in one direction. The bears have fallen asleep. The bulls are taking over. Notice they blast out through that recent high. Look at that. Nice W, right? Woohoo! There's your signal right there. So let's see where that is. So there, that's where I got all excited. That looks like right in there. See all that green chunky crazy? Right? So what is price action doing? So that's all through here. Look at this beautiful base. Right? Look at that. 1 low, 2 lows, 3 lows, 4 lows, 5 lows. Nice triangle breakout. I mean, that's what you need to see, guys. You got to learn to hunt for that. And that's, I mean, can just take a picture of that. Does it look like that? What a mess. Sorry. But hopefully you can see what I'm talking about here. So consolidation, triangle, and price. You know, this is obviously bought levels, higher lows and higher highs. Nice W coming in, breaking trend lines. We'll do trend lines and stuff in level 2. So, you know, just be patient. And, you know, the thing that you need to learn, and what I would like whoever asks this question, I would like for you to try, you know, Ethereum's not doing it right now. I don't see it. But does that mean there aren't other cryptocurrencies that are doing exactly this right now? There's probably tons of them that are doing exactly this, like all your DeFi names. They're the ones that are probably going to do this right now. So, you know, go look at... you know, that time. The only problem is I don't think you can get it on here, can you? You gotta. Oh, that's too bad. Is Ubik? I don't think Ubik is. I don't think so. But let's take a look. Maybe it is. I doubt it, but let's see. Actually, this is actually. Oh, I don't know what the hell. This is Ubik. Hey, it's trading on the. They got delisted off of Trex, and now they're trading on the Calgary Stock Exchange. What? Actually, yeah, using the volume impetus thinking. And remember, guys, this is half of the problem with looking at charts intraday. Keep in mind, this is a Sunday. This is crypto. You could actually find by the end of trading day, this entire rally just disappears. And it turns out this was a total, for Trex, this would be, I guess, your classic exit pump kind of nonsense. So just be aware of that. But just on balance, nice and simple. Big if, but if we finish today, who can tell me who's driving the bus from this point forward? And it's just now. Doesn't mean it's going to last. But if we finish today, who's driving the bus? Can you see the volume impetus signal? Somebody's waking up here. And like I said, that's predicated on this actually finishing. Who knows where the hell the damn thing's going to finish. So what you have to see is this. Now, ideally, what we would have loved to have seen, and I guess it's a bit sad for Ubik, is we would have loved to have seen that this was like higher low here. Notice there's been quite a bit of selling pressure here lately, eh? And actually, this is interesting. Maybe one of the tells why the bulls could wake up. Notice that when the bears were alive and charging, volume impetus says you got to see a high higher than this bar. That's 30,000, what does that say? 937. To validate that the bears are still in control. And they only did 25,000 here. The bulls saw that and went, oh, phew. I mean, these two bars here, right? The selling was brutal. And they really, they've really screwed with the crypto. Anybody who's on Trex and actually trying to follow this as a trade, this is heartburn central. The market maker over on Trex is just fucking with everybody here. I mean, look at this crazy ass action through here. I mean, when I see an image like this, what I think is liquidity hunt to the upside. Let's screw anybody who's short, and anybody's got weak hands. And then first liquidity hunt to the downside. Let's run some stops. Okay, then liquidity run to the upside. Let's run some stops and just a big F you. Thanks. Appreciate it. It's also, sadly, it's a function of the interest of the market in this asset. The market's not really that interested. Maybe, hopefully, they're actually doing something fundamentally that justifies our interest. Actually, this is a pretty good anecdote of that volume impetus. Can you see bears in control, selling? Then all of a sudden, hey, look, the bulls perked up here. Right here. And then, hey, look, the bulls made a higher high in volume. Something's going on here. And look, they did it again. Another higher high in volume. So actually a really good anecdote of that volume impetus. Hey, look, we just made another higher high in volume. So as long as that trend continues, guess which way price is going to go? But notice this last push, not so much. So you can already see she's probably run out of steam here, and she's going to have to consolidate a little bit. I mean, ideally what you'd love to see is this thing just, come down, go like this, and then another big breakout down the road. Kind of like how you have this, right? Where we kind of went up, and then there's a little bit, and then a little bit, and then breakout. Woohoo! Big volume impetus signal right here. And that's basically, where is that? Let's see, what's this high? 1.38, 1.0, so 1.38 is the magic number. 1.14. So literally on the moment, this traded through 1.38, which is probably about halfway through that candle. Big volume impetus sell signal, boom, up she goes. They brought it right back on light volume, which is a good sign. And then off of that same level, in come the buyers again, and back up we go. Another big breakout buy signal. That's good. So at the very worst, what I would say now, you can see there's the red guys are there. The red guys are there. The green guys are up here and now here. So this is 1, 2. Oops, 2. This is 1 and this is 2. Who's going to fall asleep first? We should see, and probably what ends up happening is this kind of goes sideways. Kind of like this. Everybody just falls asleep. And then we just wait who's going to wake up and take over. And in this particular case, the bulls woke up and took over. And up goes price. So I hope that helps with that volume impetus question. Is the person who asked this question here? Did I help answer that question? No? Oh well. We'll keep our fingers crossed and hopefully the answer is yes. All right, so can you please elaborate on how to interpret the OBV values? All right. Does showing the legend regular display the number of coin stocks? What does the percentage display represent? Increase in total market cap. Which display do you recommend? Thanks. I would imagine that and keep in mind, every trading platform is different. So what I've often found with TradingView is we'll stumble upon tools, and 4 or 5 years ago when we first started out with them, half of the time I would send them messages saying, I don't think you built this indicator exactly correctly, so maybe consider this, and eventually they end up changing stuff. So I don't think it's necessarily like there's some sort of user's manual that they're picking out. What they're just trying to do is they're trying to satisfy as many people as much of the time as possible. So they give you the opportunity to go and change how these are being reported. The way I look at OBV is I want to see the overall trend in market structure of the indicator. That's probably, in my eyes, more important than the actual indicator itself, and what the value specifically is what's the trend. So, kind of like what we said there a few minutes ago with this funny UBIC. The fact that we broke through this low on OBV, to me, says that actually this is still a bear, and all this is just a dead cat bounce counter trend rally. And I hate to say it, nobody really likes that, but frankly speaking, I look at the price action, that basically describes exactly what I'm seeing here. So you can see, if you take this point here, see this huge volume, you'd be like, all right, it's a new bull market. Well, not really. You probably go just off of this high here. There's the top end of your range. Bottom end of the range, so we're just really sort of playing around in the range, and then, it turns out, yep, the bear woke up, took over, indicator rolled over, and again, more trending signals, big fat M's, and down we go. Big volume, confirm and buy the big selling bar, higher highs on the selling bars. What does the indicator look like? It looks like a train wreck. This is a bear. Is it critical to me? I look over here and I go, okay, well, actually the OBV right now is sitting minus 48,000. Is that what it says? It's 480,000 and 16. And the indicator is 504,000. The moving average is 480,000. Is the indicator below the moving average or above the moving average? That makes a big difference to me. But more importantly, what's the indicator's behavior? Right here, good example. Volume impetus sell signal. You can see it as plain as day. Usually, or buy signal. If I said sell signal, sorry about that. Right there. clearly the bulls woke up there. And what's the indicator doing? Well, actually, the indicator just W'd. The moving average, or the indicator's above the moving average. It's a big W, confirmed by volume impetus, big green candle breakout there. Is it critical that the actual number itself here? Not really. To me. I mean, there are others that use OBV and they're going to be like, it's super critical. What are you talking about? It's insane. I mean, what I would say is on balance, remember this is on balance volume, we would like to see a positive number. So, I hate to say it, but just looking at this image from the get-go, and, the problem with this is not actually the real image. This is a manufactured from this particular date. I know Ubic, for instance, I've been in Ubic since basically it was Jumbucks. So clearly this is not accurate. But from their reporting of this data from this particular date, this paints a picture of distribution. It's negative. This is a bear. The only problem is this doesn't show you that actually this thing basically started. And it would be really interesting to see what the original Jumbucks value is. But if we do like log scale, there's 0 right there. I mean, keep in mind, Jumbucks was basically worthless. So where was the actual starting point? And because it's logarithmic, right, you can keep going and going and going. I mean, technically, where's the 0 line? There it is, way down there. So where did this thing actually start out? Does it still have further to go? Maybe. So as a result, I'm not too obsessed with the actual number. Like I said, what I want to understand is what's the trend. And if anything, what I kind of like what I'm seeing here, well, it's the exact opposite. This would actually be a good example of, well, no, it wouldn't. I don't like the fact that we broke to new lows here the other 2 or 3 days ago. That's not a good sign. Having said that, does this thing have some room to run up if these guys actually get their act together? Is there some shenanigans going on Trex? Because keep in mind, look at it. It's only Trex. Could these guys, be slightly manipulating the price? You tell me. I was on the site the other day and Trex went and, announced another big whack of delistings. So, and there was a guy on the site who was saying, well, this guy's next. It's going to get hit next. You better get the fuck out of there. Is he right? I don't know. I don't think so, but that's just my opinion. He could be right. If this thing has any chance of surviving and doing something in this world, have I got any kind of profit potential here? I mean, the problem here, of course, is that you're going, well, yeah, Brian, it's a piece of shit. That's why it's at the bottom of the end of the range. And this being moved up here, it implies that they're actually going to do something and people are going to be excited. So, this is often where fundamentals, what are these guys actually doing? And I haven't really heard a hell of a lot. So as a result, actually, the volume pattern actually corresponds with what you're seeing in price. Painful. I'm not going to sugarcoat it. But it is capitalism. It is the capitalist process. I don't really like valuing these things versus things like Bitcoin because is this a question of what Ubic's value is, or is this a question of what Bitcoin's doing? And I get the impression, looking at this image, this is just simply saying, on balance, Bitcoin's way outperforming Ubic. The picture says 1,000 words. That's why I often suggest to people, I don't know what stablecoin you're going to use. It's interesting that this thing is listed versus Tether. Not much history, though. But I think they do have... it's like a manufactured thing. Oh, look at that. No, what am I looking at here? USD. Oh, that's interesting. UBQ. Be interesting to see whether the US dollar is shorting the US dollar. Hey, there you go. There's some history. All right, cool. So this is the manufactured data set. The only problem with that is that, you look at that and you actually kind of, especially on a log scale, you got to look at if these guys puke out and they lose their lunch, you've heard Brian say before, candle body lows for trade location. That's down there. Ugh. There's 88.6. Hey, there's one of these. Is that one of those Trex FU tails that we just saw that happened here? Maybe. Could easily be. Is this thing turning up here in earnest? It's interesting when you look at it versus USD, not the tether. But if you look at it versus USD, gee whiz, that actually looks like a pretty bullish OBV reading. So go figure. Do you respect the limited tether data, or do you respect that image? That's fascinating. So it's an interesting case study. Also, too, level tours. Anybody who follows 200 SMA. Wow, what a great lesson about 200 SMA. This thing can somehow just accept above this 200 SMA. This thing might be off to the races here. But also too, what I really like, you level oneers, try and see this if you can. Notice how I drew this big reload zone, like that. And then, market comes slamming down, then rallies back up. Notice I drew this little reload zone. And look at the fight going on in this area here on the charts. Clearly, this is important to these people. This got to be a very, very important level. So fascinating to see. Anyway, we'll kind of talk that into the ground. We will keep our eyes peeled. Anybody who knows the fundamental story of what the UBIC people are doing, well, maybe come on the Daily Brief if you could and give us a report. So I hope I spoke to that a question. If you want to do the percentages to help you see the numbers a little clearly, I don't mind that. What I really want to see is the structure in OBV, i.e. the trend. And I want to see the volume impetus signals are validating what we're seeing. What are you guys saying? These guys are chatting away in here. So for me, UBIC is bullish as something. Okay, that's interesting. Young Satoshi says Metcalfe's Law. Oh, that's interesting. I wonder what that's in reference to. 61 wallets. Nah. Somebody's not overly interested. All right. Anyway, you want to talk UBIC and you want to talk the fate of the universe? Pop on the site and have some fun with us. Okay, could you do a walkthrough of TRI's trade report card? Actually, yeah. So I was mentioning this recently. I think I'm actually going to insist, and you guys aren't going to like this, but I think I'm actually going to insist that everybody fill out, keep in mind, this library right here, this is worth the price of just the subscription alone, all the information that we have in here. And we have this is sort of TRI's sort of contribution to the world. So we have in here a number of documents that I think are integral. You have to have them if you're a professional in this business. And one of the documents I've been introducing recently, and it's a core component of our level 3 program, where in fact, I was trying to explain this to somebody recently. Please understand, this education program is like 35 years of my life. That's a long time. So to try and distill 35 years of trading and trying to get educated in the market, I'm not quite sure what. Show me a chart and a chart link, and then I'll understand what you're saying there, young Satoshi. So anyway. So, and is the course complete? No, unfortunately not. As I sort of got exhausted a few years ago writing course modules, so we sort of finished it at 3 levels, but I could easily do 2 or 3 more modules on options, so then just take that and make that a course unto itself, just options. And I could do a whole mini course and rework the whole fib retracement and extension and harmonics and chaos levels. I think that actually could be a whole 6-7 module course unto itself. The ultimate trade location finder. Then there's concepts like market symmetry, volatility analysis, Keltner channels, Bollinger Bands, ATR, all that kind of standard deviation, all that kind of fun talk. I mean, it just goes on and on and on and on. I could easily do a level 4. But as it stands right now, in the level 3ers, I sort of say, okay, and we call it cheekily God mode, right? And now you don't really have a choice. You have to be a little bit more professional. Level 1's kind of introductory. Learn a trading plan, learn how to journal, learn how to hold yourself to account, learn a couple half-decent setups. Level 2, working with professional futures traders and really smart individuals. Level 2 is sort of like a blitz of candy store or fun kind of trade tool stuff. And if anything, I'm even debating whether that's a good way to come at it, because once you guys finish the level 1 program, I'd almost think it's in your best interest just to let that information distill for a little while. But anyway, so point here is level 3. I just started off the program with, okay, nobody's allowed to fuck around anymore. We got to be a bit serious about this. And one of the tools for the Trader's Workbench module is this idea of a trader's report card. And as I said, I'm actually feeling like I would almost like to insist that week 1 of the level 1 program, everybody get one of these and fill it out. And hopefully, maybe you can actually fill out a little bit of what you've learned previously. Have you actually even heard any of these kind of concepts yet? But my hunch is everything would be not applicable, haven't done it, never done it, don't even think about it, blah, blah, blah. And really the way, I hate to say it, guys. I hate to say it, but I'm just going to say it. You want to be a really good trader, you want to make a shitload of money at this, it does mean, to a certain degree, an expectation of perfection. The people who are really, really good at stuff, Wayne Gretzky, Michael Jordan, Tiger Woods in sports, if we think about sports, I mean, they're really good. And they practice a hell of a lot. And they can do things like, hey, I'll close my eyes and I bet I can get the ball in the hole. And you go, woo, that's impressive. Well, not really. The guy's done the same shot 27 million times. So it's like, I could do this in my sleep. The point is that, with regard to trading, we got to get you to there. And it usually takes a damn long time. I really like how our level 1 instructor, actually, he on his own was like, yeah, Brian works with people that are a little bit more active, a little bit more sort of polished and stuff. So as a result, he's not sort of talking to the basic trader, somebody who at least understands what setups are. So that's his like 2020 kind of thing. But he says, you know what? All you new people to the level 1 program, you don't know anything. And the only way you're going to know is you got to show me 100 paper trades. And then that way I know you know. So, something along the lines of just printing this out on a quarterly basis and just filling in how far along am I coming on my 100 paper trades. Hold yourself to account. Nobody else is going to do it. When I was at Prompt Firm, they were assholes. They'd say, well, Brian, you want to pay $5,000? We can park you in a program and we'll hold your hand. But they ain't going to do it for free. And they're certainly not going to do it for the prices that we charge around TRI. So all you really want to do is just go through this and just give yourself a grade. These top things, I like just give yourself a grade. How's my financial plan coming? Have I even built a financial plan yet? A, B, C, D, E, or F? How about position trading? Am I coming along that? How about my swing trading? How's that doing? How about my day trading? How's that coming along? These are all completely individual ways of approaching the market. They are all perfectly valid. They are all totally different. And I think the robust, the educated market participant is addressing all of these aspects of the market. Now, as you go through your education, you might put, I started this because I wanted to learn how to trade setups on Bitcoin, futures contracts, forwards contracts, whatever. So maybe you can say in a financial plan, not applicable. Position plan, well, actually, I'm day trading, not applicable. Swing trading plan, not applicable. Day trading plan, I'll give myself a B. I think I'm pretty proud of myself. I'm coming along. I've, this past quarter, I'll write in this box, I'm up to 75 paper trades. I've finished my level 1. I'm moving through level 2. I still haven't got through the 100 paper trades, so I'm not totally convinced of what setup I want to use. So I'm not even ready to take the 2020 challenge. How am I doing on my mistakes? Am I filling out my Demon Hunter log? I think it's a good idea on a quarterly basis to obviously keep track of how you're doing financially. Now, obviously, most of you new people to this, maybe it's, like I said, we've only got through 75 of my desired 100 paper trades. So win-loss rates running at about 37%. So I'd really like to be better. But if we have a 2-to-1 risk-reward ratio, what does our win-loss rate have to be just to be a scratch trader? And hit those like buttons, subscribe, and ring DMAX bell, please, along with Colleen's. If we have a minimum of 2-to-1 risk reward and we are trading setups and we are diligently working away, filling out our 100 paper trades, what kind of win-loss ratio do we have to have just to be a scratch trader? I'm learning. I'm not here to make $1 million. I'm just trying to learn how this works. You only need to be right 33% of the time. So it's critical that you learn this. And if you're right only 33% of the time, that means you are wrong 66.666, or actually 999% of the time. That's being wrong a lot. But you're not here to learn gratification out of, getting a dopamine fix for being right. That's not what you're here to learn. How about mistakes? Really, I hate to say it. I told you earlier. If you really want to be good at trading and you want to do this for a living, what you have to strive for is perfection. And the worst part about it is even when you are perfect, you are still going to be wrong a good 30-40% of the time. Just get used to it. That's the way a trader's life works. Am I live trading yet? This in itself might be a massive hurdle. You might not actually type in yes here for maybe the better part of a year of filling these things out. You just aren't there. Remember, my education program is like a full year length. You're just not ready. And that's perfectly fine. I mean, this is you are investing in yourself. You are learning a business. You're learning the process. So, for actually a number of these report cards, you might just put in a big fat no. And be happy with that. Like I saw somebody who was halfway through the level 2 program the other day getting really angry and really frustrated. And I was kind of like, well, what's going on? And he's like, he's using vulgarity to describe, certain signals that maybe work or maybe not work. Maybe it's market state, whatever. But the point here is, when I talk to the guy, what actually is going on is he fucking hates his goddamn day job. And he just hates having to wake up every fucking morning and go to this goddamn job. And he's getting frustrated that he can't learn faster and get out of that nightmare life. My only advice to you is don't let that come across on your trading. There is a very specific place that those frustrations must be released. Do you see it anywhere on this report card where he goes, I am doing this. I am not taking it out on my trading. I'm learning the process. Maybe I'm only right now running that 33% accuracy. I'm wrong 2/3 of the time. I'm learning the process. I'm learning what a half-decent trade actually looks like. Where do those frustrations have to be noted? And you've got to get rid of them, because if you don't, it's going to come back and bite you in the ass. It will come across in your trading. Absolutely guarantee you. It sucks. It's a brutal reality. So you can see here, am I doing my journaling? And unfortunately, that person, if they did their report card, I would say it sounds to me like this is a problem. And I hate to say it, folks. I think there are a lot of people on the site where this is a problem. We should have like weekly kumbaya sessions on how I can somehow just release how I feel. Just put it down on paper. Maybe record it in some journal. You know? Anyway. So, to the person who asked that question, does that help? Do you understand what I'm... Dave Chappelle. I think I saw Dave Chappelle here. There he is. Okay, good. Get to work. Okay, Captain Beamish. Oh boy. I'm nearly through the level 1 program. In the first couple weeks, I learned about stocks, bonds, commodities, and currencies. All right. These are the various markets we should try to diversify over to try and generate wealth, or at least preserve it. Yeah, okay. They are various... I'm hearing a lot of people say that cryptocurrencies now are going to be a brand new asset class. Oh, goodness. What I can't wrap my head around is that it seems there isn't really a safe haven asset market that wealth can flee to. So, in the market, is there anything that actually has a guarantee? And as a broker, we used to always say one thing and one thing only. You want a guarantee? I will show you this. And the answer is the T-bill rate. If you can get to the level 3 program, we learn how industry actually values things like derivative products. And the benchmark, this safe haven that you talk about, there's actually a specific name to it. It's called the risk-free rate. And it quite literally is that T-bill rate. So while it may not seem like it in this fugazi sort of hyperinflation of money supply world, cash is supposed to be your safe haven. But every once in a while, the whole definition of cash itself has to be reset. And that, unfortunately, is what's going on right now. About once a century, the whole concept of cash has to be redefined, which is scary. You're probably sitting there going, this is not fair. I bought this course for you to tell me how to sleep well at night. And what you're saying, Brian, is there are some times in the market where you can't sleep well at night. That's exactly what we're in right now. And it sucks horsecocks. I'm not going to deny it. It does. There is one solution to all of this. It's not even really a solution. It's a workaround. In like coding and stuff, they would call it a hack. Who knows what the one sort of workaround to all of this sort of what the fuck is safe in this world? There's only one answer. Anyone? Danny! Well, it starts with a D, but no, I wouldn't say it's Danny. Diversification! One person got it. Hey, way to go. So, would it be smart to have like cash in US dollars, cash in Canadian dollars, cash in euro, cash in yen, some Bitcoin cash? Oh, wait a minute, that's something totally different. Tether instruments. I do find it fascinating that most of these tether instruments are denominated in US dollars. But I thought you guys hated US dollars. Why are they all choosing to use US dollars? That doesn't make any sense. Does that make sense to you guys? Right, so someone here saying, well, you know, this is just the basics of eating your vegetables for the level 1 course. And you're right. You know, the question is, oh God, there you go. I'm not even going to give that the dignity of a response. I'm going 100% long Trudeau bucks. Woohoo! Socialism for the win. And maybe if you're lucky, your kids will look like Fidel Castro too. Woohoo! Us Canadians, we've got a lot to be proud of. Oh, goodness. Oh, well. So, you know, this is all about the efficient frontier. This is all about diversification. This is all about don't hold all your eggs in one basket. Spread the jelly. And if it's one thing I'm very, very good at is I love to buy little bits of everything. You know, I think over on Trex I still have. Even though they've killed about half of their universe of cryptocurrencies, I still have 100, 200 coins over there. You know, anybody who follows me on the site, geez, I must have at least 100, 200 different stocks on the books. I've got, of course, corn and all the various different machinations of crypto. Got a big whack of gold. Got a big whack of Canadian dollars. Big whack of US dollars. I mean, I just own everything. In fact, the one thing that we don't own that I wouldn't mind owning is maybe a little bit of euro in here just to spread the jelly a little bit more. So, one thing I will not own, and this is just me, 50 years old, I was a product of the Cold War. I will not own totalitarian dictatorships' assets. Sorry, just won't do it. So that means I'm frozen out of really wonderful investment opportunities like the great country of Winnie the Pooh. Frozen out. I just cannot participate over there. I've gotten a little sloppy. A couple positions I did put on, and I'm not really proud of myself for that. And of course, there's no way in hell I can buy Mr. Putin's totalitarianism. I can't endorse that. Can't do it. Sorry. So that's just me. It's just old man. And the good part about it is it's my plan. It's not your plan. I don't really care whether you follow what I do or not. I don't care. I don't get any gratification out of whether you aspire to my political beliefs or not. That's water off my back. I just don't care. What you got to do, and the one thing that will make me happy, and it makes Spirit happy, and I think it's the reason why I'm doing this, is I have to get you to, number one, try and identify what makes you as an individual unique and special. Why are you doing this? Where do you want to go? We have a concept called verbal diarrhea in the education program, and I think it's actually helpful just to sit down and just one day, right? Very quiet. Maybe it's a rainy, snowy day or whatever. and just take some time and just have a conversation with yourself. A lot of people just never do that. Where do you want to go? Why are you doing this? What do you want to get out of it? What makes you special? You know, I had a conversation with this the other day. The guy's like, money, 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 money. And I'm like, dude, stop thinking about the money. Start thinking about, you know, things like, how can I help other people? You know, there's got to be some sort of skill that you have. And what's weird with spirit and universe is if you give unconditionally, it's remarkable how the universe returns all those things, like money things and stuff like that. But it's not going to be like a big check. It'll be some guy will come along and go, hey, you know what? I want to invest in your idea. Here's $500,000. Get to work. You know, it's like, wow, where did that come from? That's just the way this universe works. You know, that's one job that I think Spirit really would like me to try and get across to you guys. And I notice that when I do get that message across, people's sort of their mindset changes. Now, you know, the one thing that I like and that works for me and that I think is special about me is I think I'm a pretty good teacher. And, you know, I spent a lot of time studying financial assets. So, you know, this is the venue that I've gone down, and it seems to work with me. And, you know, Spirit's really happy with the job that I'm doing. Then the second thing is try and set yourself up so that you never get hurt by something. And how you do that is actually, ironically enough, going back to this. We don't want to take too much risk on any one idea. Have fun, participate. It's kind of like that UBIC. I mean, I got like 5 G's on it. If it turns out the whole fucking thing's a scam and Trex is just gonna totally like do a rug pull on them, it might be the case. I don't know, but I'm not gonna get too hurt by it. If it 10x's, great, I got 50 G's. Merry Christmas. Be able to participate. Set yourself up to be able to participate, and you know, pay yourself while you go along. Have some fun with this. I hope I you know, I don't have a heck of a lot to offer this world, so I hope the small little skill set that I have, I am speaking to that desire that Spirit would like. You know, see if you can somehow just make a positive difference in somebody's life. And it could be something as simple as, hey, I'm going to go take my son out and try and give him the best afternoon possible. Maybe we're just going to go get an ice cream. You know, I don't know. But just try and make a small positive difference in somebody's life. Anyway, sorry, a little bit of pulpit talk there. So let's get back to what I'm supposed to be talking about here. So my question to you is, how would an investor with your formidable experience... Wow, there's a... Really? Play this. I think hopefully what I've just been babbling on here for about 5-10 minutes is right. Diversification. What isn't a fugazi? Well, I mean, you know, what isn't a fugazi is a hard physical assets. So, you know, everybody needs a home. So as a result, you know, like a home's not a bad idea to have some money invested in. Problem is, what are you trying to do? Are you trying to flip the house and make a capital gain on it? Or are you trying to live in the house? Now, it's interesting. I remember when I was a kid, they used to have funny property tax laws in Toronto where I was growing up. Or, I can't remember what city it was. Might have been Toronto. Anyway, where if... They would come along and they would assess your property by what your house looked like from the outside. So a lot of people, they never did anything to the outside of their house. And it looked like shit. But then you go into the house, you open up the door, and you're like, whoa, holy shit, look at this place. So, you know, you could invest in your living conditions. Like, where are you living? Sorry, guys. I always have a habit of getting so choked up talking to you guys, and then I have to blow my schnoz. You mentioned again tonight that Bitcoin could go into the hundreds of thousands of dollars because the Fed is debasing the greenback by flooding the market with said currency. Most equities are way overvalued. Commodities are generally manipulated. Oh, greatly manipulated, and I wouldn't touch bonds with my neighbor's pole. Okay. Even our hopeful savior cryptocurrency feels like it is doomed to be controlled by the banksters. Creating true wealth seems to be becoming more and more a wild goose chase. Could you please give me your thoughts on this? And am I being overly pessimistic in this case? Perhaps. So number one, yeah, you are looking at the glass right now, and you are seeing a half-empty glass. It sucks. I mean, don't get me wrong. I mean, there are plenty of quote-unquote problems out there in our world. But you're definitely looking at this as a half-empty glass. Now, yeah, and as somebody says here, I mean, the irony of it all is that there's really no wrong way to look at it. What I would say is, are there any ways we at TRI have taught you to identify quote-unquote value? And actually, if you're this far along in the course, the answer actually is yes. But I don't think you've actually been paying attention to those little notes. I think, if anything, I hate to say it, don't mean to be rude here, sir, but I almost feel like when I read this, you've already made a predestined conclusion about the way capitalism works, the way the market's set up, and your opportunities going forward. That's what it feels like when I read this. Please don't be insulted, but that's what I'm feeling. So let's do a poll here. And actually, Josh, this might be a good opportunity for you to maybe even get a tweet out of this. What might be some signs of quote-unquote value in the marketplace? Could we hunt for those? Anyone? Are there any screens? And of course, if I ask this kind of question, the answer is a blatant yes. Are there any screens that we use to try and identify value in the marketplace? So technically speaking, using price action and just simply using supply and demand, technically speaking, a big fat weekly W is a technical representation, a visual representation of supply and demand dynamic shifting to the demand side. So there is that technical basis. What's the other part of our analysis that we do here at TRI that makes us rational analysts? Must be something other than technical analysis we can do. Remember, I asked you the question, and if I ever ask the question, the odds are the answer is probably yes. So if anything, what I want to see from you, Werner, I want to see you looking for these little signs of value. So what are the signs of value? Fun, 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 says Josh. If we were thinking about investing in a commodity, let's make this a little easier for you. What would we be thinking about if we were investing in a commodity? Looking for value. Good. Cost of production, that's a nice start. If we were investing in equity, what's a really easy way for us to know that, you know what, there's probably some really good value here in equity? Okay, I'm not quite sure what that means. Nobody? It's in level 1. Little level 1. Oh, nice. So, excellent, Wade. Wade nailed it. If you ever see somebody who is owed money by a company take stock in the company in exchange for that debt, that is instantly a sign of value. There's no way that person that has a legal claim that can be, shown in court, and you can actually force somebody into receivership. You can force liens. You can force insolvency. There is no way that person is going to forgo that debt for shares, equity, which has no intrinsic value by definition. There is no way they are going to do that if there was no value. Absolutely. So that's an excellent route. And Wade, what maybe you can help who asked this question, Werner, John Wicks. What's another sign of value that just so happens to be in the same model that we teach you that has shares for debt notations? Werner, where are you? Anybody help this person? That's the model, right? And the reason why this model works is because we find value. There you go. Where are insiders long the assets? If I can own lower than where the insiders, the directors of the company, are in, that puts a huge smile on my face. So, those are just a couple simple. Can I, if it's a commodity, can I buy at or below cost of production? If I can, then I'm buying value. Doesn't necessarily mean that the market's going to respect the value, and the sad part about it is these silly humans, they act in more emotional ways when they're bidding up and down assets. And you see what's going on in crypto right now. We are nowhere near value, and yet the public keeps coming in and buying. And they just will continue until this damn thing tops, and then we go through the whole process of cleaning up. So if you're thinking about investing in commodities, think of cost of production. If you're investing in things like equity, think of tells of value equity-wise. So if you're buying into a company earnings stream, single-digit PE ratios are a great sign of value. The problem is, and even if you look at the broader stock market, what is the PE ratio of the S&P? Well, we'll go S&P 500. Do you think it's single digits? Maybe we should say current. So if we said that, if the PE ratio of the S&P is single digits, wow, that is really good value. And hopefully you can see, hopefully it says somewhere here. I think this will say it. Let's see. Historic S&P 500 trailing PE ratio. So there you are. You can see 14 times here, 15 times here, 13 times here. So here we are right now, 25 times. I like this. Look at this historical. Can you see? Look at the S&P 500. Look at that PE ratio, 7.67. And 1980. Wasn't there a guy who actually came out? And actually, you guys just learned this in level 1. There was a guy that came out and said, sell the stock market. It's garbage. And, of course, that was absolutely the wrong thing to do in 1980. Can you see the single-digit PE ratio? So here we are up at 27 times earnings. Is this cheap or is this kind of expensive? So notice that this thing's moving all over the place. It's not really static, is it? Could you just simply force yourself to wait until equity valuations do something like this before you go and invest your hard-earned money? And where are you going to put that money while you wait? And the answer is you should put that money into short-term guaranteed instruments. Things like T-bills, I guess now Fed Fund futures, that is guaranteed, what they call the risk-free rate of return. You're not going to go pile all your money into ideas, but if you run the screeners and you run the scanners, as assets come along and they represent value and they start putting in things like weekly W's, you can go and start allocating that cash that's sitting on the sidelines, and maybe you go put like 5% of your stake into stocks when this W comes in. Well, maybe it's up to you. Look, there's another W right there. You know, maybe that's what you do. Point here is, you're right. We're not really cheap here valuation-wise, and we're not really ridiculous. Oh my God, this is disaster. I mean, you can see, look at how crazy-ass peaky that got there. We kind of want to avoid that. But look how beautiful this W is here. So you can actually, ironically enough, you can do all the technical analysis we do on the fundamental data. And this is what drives fundamentalists crazy. They hate this. You can say, well, I'll just wait for a double bottom in your PE ratio and I'll buy. And you don't do anything. All right, here's 2005, 2006, time to buy, and woohoo! Stock prices explode higher. Where am I going with all this? What am I trying to say here? Half of what you're here to do at TRI is sort of learn, what does value actually look like in the marketplace? Are we buying, fundamentally, WDB assets that are trading at or below book value? So if I can buy an asset that's trading below book value, then theoretically they break the company up in bankruptcy and all of the assets are sold off, I actually get more money. If you ever see a stock trading at cash, what they actually have cash on the balance sheet, that's a no-brainer. Because you're just buying the cash. Cash is cash. So I love that. If you have companies with earning streams, we want to have those low PE ratios. And we also get into things like the GARP model. If you want to invest in growth stocks, try and buy the PEG, price to earnings growth, has to be a certain level. Right? These are all covered in the FA part of the course. It's going to take some time to get used to this stuff and review. But, actually a really good example. Half of what you have to do in this silly game of investing is you have to buy when others are crying and sell when others are yelling. And sometimes it actually means stepping into the breach and loading up on a name that everybody else in the marketplace thinks is crap. And that's fine. That's the way the market works, right? Some people's trash is other people's treasure. So here's a really good example, this CLAS. I mean, you look at that chart, and, all of you guys that have been working with me for a while, you should look at this and go, gee whiz, this thing's up and down. At some point, they're going to have some sort of news, and the darn thing's going to go zipping up here. But they just recently reorged the company, right? So there was the big stock rollback. Absolutely destroys all of the old shareholders all through this. They all get absolutely wiped out. And heading into tax loss selling season, and keep in mind, we have a tax loss selling deadline coming up here, where once this event hits here, there is no more tax loss selling. So we just had the reorganization of the stock. Insiders were just announced that they've been issued stock at 50 cents a share. So that's right up in that area. There's not, I don't really like the amount of shares, and they've done a couple things here that don't really sit with me with the best sort of example of this model. But nonetheless, relatively low amount of shares out. There's like 30 some odd million out. Insiders are heavily incentivized to get the stock above 50 cents because that's where their options are. Below 50 cents, those options are worthless. So right now, all of the insiders are looking at their stock options going, oh, this sucks horsecocks. They're worthless. We got to get this stock above 50 cents, right? So these options are worth something and we get paid for our work. And, of course, no debt. They just rolled the stock back. Remember, they just rolled the stock back, so that means all these old shareholders here, right? And this is a nasty one. 1 for 20. Boom. these people that bought the stock over here, they are booking those capital losses right now. I guarantee you that's what's driving this stock down right now. So, relatively cheap stock. Number of shares out, not bad. Insiders, we know where they're incentivized. Am I going to make a fortune on this thing tomorrow? Probably not. Do I feel as though I'm coming in and I'm buying value? Yeah. But the thing here is I'm not going to go bet the farm all in one go. I'm taking a very patient, very sort of step-by-step, methodical way. I don't know where the bottom is. But technically speaking, I think there's a very high probability they go up and fill in this gap. Somebody tell the public how often gaps get filled in. They get filled in pretty often. At that point, will the stock be value? Who knows? My hunch is on this event, the stock will be way overvalued. So, since I know that the directors are incentivized from 50 cents, can I just force myself to come in and accumulate this stock as it's going through this tax loss selling wipeout here? As you can see, that's exactly what I'm doing. So I can't tell you, how do we say this? I mean, the sad part about it is there are going to be people that come into the market and buy Tesla right here. And the question ultimately is, that other one, could I see a massive increase in price from these levels? Yeah, I'd say, just technically speaking, I think there's a pretty good odds that we get some sort of bounce back up into these levels. And then I can sell half on a double, establish that risk-free trade, blah, blah, blah. In fact, this one we're doing a Korean barbecue strategy, so slightly different. But nonetheless, I think I can get some off on any kind of test of these highs. If I come in and Tesla right here, is it realistic for me to think about doubling my money from $1,200 there? As an educator, of course, I think I've already talked to you guys through the bot, and you can see where I'm supposed to be long. Ironically enough, actually, if I bought where I was supposed to buy, I am coming into my double level here. But buying here and looking for a double, that means I got to see up here. And I don't know whether that's really realistic. That's kind of stretching it a bit. So, what am I trying to say here? I'm the type of guy that I like buying value in the marketplace, but usually what it means, and actually all of these are a great example, like this Aries strategic mining. Again, VCIM names, right? Stocks rolled back, and when they rolled this thing back, it just died, right? And actually, if you zoom in on this, it looks like that CLS chart. Well, actually, not so much. So they rolled the stock back, nothing. Now, could you, and then, we had shares for debt, options, directors. This one was actually a much more textbook definition of that VCIM model than the CLAS, but you can see the shareholders getting absolutely destroyed here. Market's down. Horrible. In fact, I told somebody the other day, you got to be buying when they're crying and selling when they're yelling. So what was the propensity of this thing to double? Well, that was to that level there. Gee whiz, that was pretty easy. How about a double from here? Well, that's that level to there. Oh, gee whiz. And then, hey, look at that. We got another double off. That's 3 doubles. Or, from the bottom, gee whiz, that's 10x. Just on a really technical, simple setup. Well, this is a funny one. Again, trying to buy value. They roll the stock back, and then you're in there hunting W's and buying, and you tell me. Is that worth it, trying to get in when they roll the stock back and there's value? I mean, if you were long this stock from here, would you even have any consideration that there's a bullshit stock market and it's a total fraud and it's a total fugazi and there's no value anywhere? All right, so Werner said he's got to get out of here. Hopefully I've talked to you a little bit about value. I think there's actually quite a bit of value. You just got to know what to look for. And then when you see value, you got to step in and buy. And then when the public, of course, is bidding this crap up, you got to be selling into those rallies. And, I might argue it's the exact same thing as Bitcoin. So just to finish this off, we all know what the cost of production of a Bitcoin is. It is not $62,000 a Bitcoin. And I've told you repeatedly, if we follow the cost of production models, and then we follow something as simple as a buy when it, reloads on, bottom end of ranges, well, you can see exactly where the buy window is. Now, here we are. I've got a bunch of money to invest, Brian. What do? Do I go and buy Bitcoins here? Well, there was the buy window there. And, we went on and on and on about how fucking awesome. We had one guy on the site, Kevin, who basically did buy that. And he said, well, Brian, that's what you taught me to do, so I did it. And well, look how fucking rich I am. But coming in here now, what do? I would say just sit in cash. And you got to wait for this event. Again, now, had you bought and you're long, well, just keep spoon feeding as we move our way higher. That would be my answer to you. Don't chase. And if you have to sit in cash, guaranteed rate of return, they're going to be like, oh, inflation. But I would say, look at that inflation talk. Consider that your put premium. You're going to be sitting in cash. I know for exactly, I'm going to be able to pay the bills. I'm going to be able to buy groceries. Who knows what price they're going to be, but at least I can buy them. Keep in mind, maybe down the road you can buy Bitcoins with Doge, or you can buy your groceries with Dogecoin, but I don't think so right now. Suppose maybe at some point you can buy your groceries with Bitcoin. But the old analogy, especially in the stock market, is you cannot buy your groceries with stock. You just can't do it. So as a result, if you have to sell, because you have to buy your groceries, well, you're going to get beat up. So, obviously cryptocurrency is a funny little different scenario. Maybe we could use the cryptocurrencies to pay for rent and pay for groceries and stuff. But the point of cash is that you are never caught with your pants down. And if they're going through the inflation game with cash right now, I actually consider that it's not a good premium. I'm not going to say it's good or healthy or good economics or anything like that, but I can justify it as I can sleep at night premium, and it sucks. Don't get me wrong. I don't know. Blah, 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 blah. I sure hope I helped that a little bit. That sure was long-winded. Holy shit, look what time it is. I gotta get out of here. Damn. How the hell do I just blab on endlessly? So the answer here, just simply put, is just to diversify. Okay, creating true wealth seems to be becoming more and more of a wild goose chase. No, not really. Could you please give me your thoughts on this? And am I being overly pessimistic? Yep, you're being overly pessimistic. What we need to do is you need to... you're coming to the equation at the very end of the party. What you actually have to do, John, right now, and I think you're watching this later on, don't fucking chase. Is what's going to end up happening here, especially with people like Bitcoin, is they're going to come in, they're just going to give up, and they're going to say, screw this fucking market timing nonsense. I'm just going to go in and buy it. To hell with you. Just buy the damn thing. Just get it done. I'm trying to show you a place where I can show this. It happens every cycle. Don't get me wrong. At some point people are going to be like, Bemis, shut up. You don't know what you're talking about. This thing just goes straight up. But understand, you come in, you chase, you buy up here. It's probably exactly the same thing as this kind of scenario. And you might have to sit for a year or two and go through a lot of pain. Might be like this. I don't know. Maybe it's going to be a relatively short pain window. Or it might be, and actually I guess this doesn't even have it, does it? I'm going to have to show you the stamp chart even though it's a mess. But it might be like this. This is where I first came into crypto. So you're coming to the market right here. My one piece of advice to you is, for God's sakes, don't chase. Cash is king. Once you spend your cash and it's gone, then it's gone. And it doesn't come back, especially if assets collapse. And, you know, tragically, I had a bunch of people join the site all through this exact same conversation. And I just said, look, you just got to sit there and do nothing. You might have to sit there and do nothing for the next year. You got to wait for those weekly W's. And you can see how long it took for that new weekly W to come in all the way down here. And when, you know, look how long that took. Took a while. You say, well, okay, well, maybe the previous one was different. No, same damn thing. Gotta wait. Remember I told you about this one, right? That was that second Silk Road auction after the weekly W, and that was a 61.8 pullback. That was the buying opportunity of a lifetime on Bitcoin. But that's what you gotta wait for. So does crypto look like this right now? No. I would say, you know, when that silly politician was told to shut up, and they were throwing bags of money at the market, that was right here, which it does look like, right back down against the original weekly W. That was your buy right there. You want to chase and you want to add? Okay, fine. I remember Bollinger. He got super excited on this inverted head and shoulders and volatility breakout. Great. Come in and buy this asset now after that, that's not value. And, you know, when your comment about, wow, this doesn't look like value, this looks like a trap. You're right. So what you got to do, you just got to sit and cool your jets. And you might have to sit there for the next 6 months. And what's worse about this is you might see the damn thing go, woo, and then woo. And so through here, you're like, fuck you, Beamish. I'm going to sue. I'm calling my lawyer right here. You're, well, actually, I went and bought Brian, so actually I don't want to talk to you now because I'm super embarrassed. That's 9 times out of 10. That's exactly how the conversation goes. So... okay, I think I'm going to try and stop talking. I got to go get pretty for the boys. So have yourselves a great day. Give me a big PMA. Good luck with Liam. I'd appreciate it. All the best. And I got to get out of here. Bye for now.